Good. Broke? Is it? Did you mean to write broke or break? Broke. Right. Um, got some analysis here on the Kiwi, and I've got a bit of concern on this. Is the analysis is all correct? You've the fib that's reasonable place to put the Fibonacci. You've got the horizontal, and you've noted the divergence, everything that you're looking for price action in this bearish, yes. But your entry here at 85.60 is out in the middle of nowhere. I'm not exactly sure why you've chosen that price. When you go to look at it, 85.60 is in here somewhere. We're around, where is it? 85.60 is sort of there. I just don't understand why you're looking at entering the market there. There was an identification at this point in time on this rollover here, and you should have been looking to enter the market underneath that bar there, underneath this bar here, and you would have got taken in on this day here. And you're sitting pretty. You've got two consecutive seller bars. You could move your stop to at least to break even, or even protect profit by moving your stop to there. So your analysis is sound, but you're coming in way too late, and you're risking you're risking 84 pips. That's right, yeah, 84 pips to make 110, and that doesn't make sense. So it's a bit late for entering the trade. Analysis sound, but you're just 2 days late. So, next one is pound Kiwi reversal. You mentioned range on the chart where entry would be in this situation. Is there a rule covering potential entries that do not fill on bar 4? Yeah, reanalysis. I mean, you look at the analysis again. If you don't get filled on the day you're expecting to get filled, but the pound Kiwi here, we had divergence at this point in time. You can see the little divergence here, and you would have been looking to enter above this red arrow here. We're getting 2 days of buying. This red arrow here was a high test bar, and we did not get the entry. We then get further divergence across the next 2 lows, and you get an entry above this bar here, the 2 days of buying, higher highs and higher lows, and you get your entry. And so that was the entry there on this day for this particular trade. If you the question then becomes, is this in a range, or is it just a phase 2 trade? It's hard to tell at this stage. You could be looking at it as a range. You can see it's sort of been stuck in there for almost a year, between $1.91 and $1 or $2. The moving averages aren't that flat though, so perhaps it is just a phase 2 trade, and you'll be getting your stop up underneath this to protect protect your profit. At that point in time, if you're trading as a range, you'd have your stop at break even and looking for it to continue. Divergence, and this sort of answers the next couple of questions you've got, divergence doesn't indicate that it's a change of trend, a complete change of trend. It just indicates that there's a retracement happening. That retracement could end up being a change of trend, absolutely, such as the Aussie dollar. We had divergence, and it could have indicated across here, I think there's divergence there, which could indicate the phase 2, or it could indicate the complete change of trend. You don't know at that point in time. Okay. Again, here we've got divergence. It could indicate that this little uptrend is finished, or it could indicate just a phase 2 is happening. You don't know at that point in time. Anybody who tells you otherwise is, I think, having a lend of himself. So that's the pound Kiwi. Okay. Gentleman was asking about these 2 trades that went south on him. Both the Kiwi dollar, the Swiss dollar, Well, it's dollar Swiss, it's not Swiss dollar. But did you watch the volatility in the market last night after the good news out on the euro? Euro and Swiss trades looked good, however, before the 12-bar Draghi speech they tanked, even though the news was good. I'll come to the euro if you want at the end of this. There's only a couple of emails to go through, so I'll come to that. This is, it's not the CHF US dollar, it's the dollar Swiss. I'm not exactly sure where your fib should start from this bar here. RSI is converging. You're giving it a no, but you got convergence. Horizontal resistance, not support. Yep, it has that. So your analysis there is sound. Your analysis here is sound. Could even note that there's bullish or bearish hidden divergence. And also convergence. So look, your analysis is sound. The question is that they didn't work. Well, it doesn't always work. First thing is the market has its own agenda. We've just got to catch the trades as they're starting, and it's the management of them after you get into the trade is how you management after you get into the trade is how you protect your capital to stay here for longer, right? There was, you were looking to get in here. I didn't take this or the euro dollar trade, but you were looking to get in. It's taking too long. You're looking to get in here. This is a reversal bar, and you'd move to protect your capital, so you're not losing 1% on the trade. And same with the CAD Swiss. There's a low test bar here. That's a reason to move the trade, but certainly the reversal bar, you'd be moving your stop and protecting your capital at that point. Not every trade's going to work, but if you're taking these setups when they do appear, this is the strongest point of entry that you can get when the trade does go in your favour, rather than chasing it halfway down the trend. So you haven't done anything wrong. I think it's just one of those market conditions where it's gone against us, and that does happen. And so therefore you've got to have strong risk management and trade management rules to be able to reduce your losses and let your profits run. Volume is up and down. I don't know. The net's playing up a bit here today. Okay. The cool music in the background, yeah, possibly. So dollar CAD is the next question. Is could you put technical yesterday was inside buyer bar? Yeah. I was thinking of putting the entry at $10.74. $10.74. $10.74. Above this bar here. If price gets there, there's clearly buyers in the market. That's true. We'll put it in above this bar. Look, I prefer you to leave this alone until Monday. There's a bit of news out tonight in non-farm payrolls, and there's also news out on the CAD. So I think just being patient, waiting for. Obviously, we don't want a bar like this, but that's the risk you run. Is You're either going to get in early and get taken out on the volatility tonight, or you'll get in and reap the rewards. Now, you don't know what's going to happen, so you're flipping a coin. What's the news tonight on the CAD is the unemployment rate and Ivy PMI, plus the non-farm payrolls on the US side. So that's a whole lot of volatility I'd rather stay away from. If I'm not in a trade, if I'm in the trade, I'll manage it, absolutely. But I'm not going to get in on a trade, on a 50-50 bet that it could go in my favour. If the CAD Swiss sets up again, absolutely. Absolutely, and I'll come to the CAD Swiss because there's another question on it. If it does set up around here, similar to what it's done over here, yeah, absolutely, look at taking it again. So, dollar CAD, I'd potentially leave it alone for the time being. Wait for Monday and see what the bar looks like on Saturday morning. Okay, now got a question here on Aussie dollar management. Just had a coaching session, and the concept was way of reducing your stop loss using the 4-hour. Now instead of have a stop loss of 76 pips instead of 122 pips, thereby increasing your profit margin. It doesn't increase your profit margin. What it does do is brings your stop a lot closer to the market, and it's fabulous to look at this in hindsight. Sounds like your coaches are, because going on your next email, your coach is a great hindsight trader. The question you've got though was the pip cost makes the same and thereby reduce your risk. Yes. Well, that makes sense. Here you're risking $100. Let's say it's $100. It's on 122 pips. So therefore, you let's call it $122, right? So you're risking effectively $1 per pip. Yeah. And if you're risking $1 per pip, and then you take your stop down to 76, then you're risking only $76. And $76 is obviously a lot less than $122. Therefore, you're risking less in terms of the percentage of your capital. But it doesn't increase your profit margin at all because you're still risking $1 per pip, right? And therefore you're only making $1 per pip, so it doesn't change your profit margin whatsoever. So what he's talking about is saying, okay, calculate your risk on the daily, but then move your stop closer on the 4-hour. All that does is bring your stop a lot closer to the market, and therefore it increases the chance of getting taken out. The strongest point of support is this here, unless you go down here. But the strongest, and that's then your $1 per pip is a lot smaller. But this is the strongest point. This is the strongest point of support, and unlikely to get taken out. But moving it to here, it is increasing the chances. He reckons that's the key to success. Well, I don't know what the hell he's talking about, because all you're doing is the same $1 per pip. It's not increasing your profit margin whatsoever, because you still got $1 per pip. Whether you do it on a daily and have a 120 pip stop, and it runs 122 pips, or you do it on this method and you still got $1 per pip and it runs 122. You're still making 122 bucks. It makes absolutely no friggin' sense, and I don't know what this guy's on about. Which brings me to your next email, is the CAD Swiss. All right. Now, what have you said in here? There's quite a... the position on the point of the high on the 28th as it touched the trend line. This is hindsight trading, and I love it when people come back to me and say, "Oh, look at this! It's fabulous in hindsight." Saying, "Yeah, I wouldn't have taken that trade." Well, fucking good on you. That's great in hindsight. If you look at this on with the 20 EMA, where is your you're cycling along the 20, okay? And he's pointing out this high here. He's pointing out this high here and saying, well, because of that high there, we'd with this high test bar, we'd breach that high. I'm not going to take the trade. Well, you had this coaching session yesterday. That's fabulous. I can do that in hindsight, saying, yeah, it's a shit trade, don't take it. However, you look at the 50 EMA, and when they're cycling, we're nowhere near each cycle, and that's particularly why I don't like to really trade off the 20, is that you've got this the cycles happening. There's your phase 1, and here's your phase 2. Yeah, and therefore we're nowhere near breaching that high. 382 is a shallow reversal, to be certain, sure. And there's no real major resistance here, except for this high here and these lows here, which we sort of tested. The bigger resistance is towards up here, which is in our 50, and certainly not back from the previous cycle, which is the last time it touched the 50. Okay, you look at every other cycle, it hasn't, when it's come back and touched the 50, the previous high has not been broken. Fundamentally, there is nothing wrong with this going further south. You talk about support, well, this 79, we go back to 2000, beyond 2000, it used to be a show when we were on the other side back here in the 90s. This low here is a major support line, yeah, and that's why we look at it to potentially take the phase 2 trade, yeah. But beyond that, there's nothing, and who's to say that it can't break that and go below it? Certainly not that guy. We also mentioned something about RSI, and as I said, the RSI indicates at this point in time, we've got this divergence, indicates that there's a reversal of this trend. It doesn't mean that this whole downtrend is going to finish. It could, by all means it could. You know, the Aussie Kiwi certainly looks like it's doing that, but it could also indicate just a phase 2. You don't know at this point in time. Yeah, fabulous in hindsight that this bloke's going, yeah, no, I wouldn't have taken that trade. You know, it's clearly making lower lows. It's clearly in a strong downtrend. You know, there's no, we've got momentum here is, you know, on the high side, which would indicate there's limited movement to the top side. Yes, you know, momentum is just an indicator, and it will follow price action, as you can see here. It can go beyond it, and price will still fall. But following this move, last time RSI was up here, have a look. Last time RSI was up here. You know, and here you've got bearish hidden divergence, in that RSI is higher than where price is at. So it's everybody's got their own opinion, true. But what shits me is hindsight advisement. That's really it's, you know, it's easy to say in hindsight, oh yes, that's the wrong thing to do, or that was the wrong trade to take. But as I said about the on the other person's analysis, is that you've more often than not, and as you mentioned, you know, if it would be okay if you took all of these trades on the way down, it would pay for the mistake at the end. And this could well be the end, and who knows, you know, 79 might hold for a long time to come. But the Swiss is weakening, and at the moment on the back of the European news, and I'll cover that in a second. But the Canadian outlook is far weaker than what's coming out of Europe. Yeah, hindsight trading is annoying. It'll be wise to stay out and look for something better. Again, in hindsight, that you can say that, you know, but you more often than not, you take these setups, you take them every single time, and it's about when it doesn't work, such as this, we moved our stop, or you know, I did on the EuroCAD, and I only lost 0.5% or just over 0.5% on the trade. More often than not, that trade's going to go in your favour. And if it sets up again, as someone asked, you know, if it sets up again, would you take it? Absolutely. Who's to know that this trend is not finished at that point in time? Sorry for losing my shit, but yeah, hindsight annoys me. Fine-tuned pair selection. As this entry scored well? Yeah, it did score, and as I said, you take it every single time. All right. Any Any other questions? Okay. The pound 4 hour, yeah. I've lost 0.5% on that one as well. The pound 4 hour. Had my stop under here and got taken out, obviously. But I've made it effectively on the daily anyway, so there was ended up being a slight win on the day because I made more than 0.5% on the daily and lost 0.5% on the 4 hours, so I was up a couple of bucks on the pound. We got a hiding. We all got a hiding last night. Yeah, the euro and the pound certainly came off. The euro. Now let's talk about the euro. As someone said that it was good news. Well, the fact that they didn't cut rates was good news, but what Draghi did say and what they haven't talked about before was quantitative easing, and they said that they're talking about quantitative easing, and the fact that they are talking about it, not that they're introducing it yet, that's a long way away, but the fact that they are talking about it suggests that they're trying to depreciate the euro, and so therefore it's obviously the market turned around again and sold off. If we look at the weekly, it has been a good strong trend for some time. You look at the monthly, and we're on this trend line here. Not that I believe in a whole lot of trend lines, but it's looking more bearish on the monthly than anything else. It's a bit lost, but I do think the euro's due a run, and they're not producing that great of numbers. Their inflation's gone and stagnated. They're a quarter of what they expected. They wanted inflation, CPI, to be at 2%, and it's out at 0.5%. So it's just treading water, which is indicative in the price of the currency. So they're not going backwards, but they're not. They're certainly not getting the growth that the US and the UK are going, although the UK, and this is why they came off last night, also slipped. They've been printing slowly this year. They've been printing bad data, and it's funny because it was this time last year that they did the same thing, and the year before. It seems that the first quarter or first half of each year the UK starts to slip, and then they pick up in the back end of the year. So the pound is it's still showing great numbers. They're still well above growth trend. But it's just pulling back a bit, and the run that we're looking on the pound is potentially, especially with that massive resistance across here, the run on the pound, maybe this is over. You've got to be flexible with your views. You can't be set in stone and married to an idea. You can see that resistance there. And when you start to see the writing on the wall, you've got to go with that. So perhaps my bullish stance on the pound should be revised, and we'll sit on the fence to bearish on that. But the euro, I'd probably be more of a bear now than a bull. Aussie, I think it's getting support, not from any good reason that the economy is picking up, but more out of where you're going to park your money if it's not performing in the Eurozone or the UK. Where would you park your money? And, the yen's weakening, so it's either in greenbacks or it's in Aussie or Kiwi, where you're still getting a decent return from interest rate market. At what point do you let the price drop to a low or reduce your stock to preserve your capital? At what point do you let the price? Well, let's have a look at the EuroCAD, which I just had on. I had my entry in here, and my stop was initially underneath this, and I'd still be in the trade if I left my stop there. But I risked 1% on the trade. You could move it after seeing this bar, the bar that got you in. You could move it after seeing that bar. I did not. I don't think 1 bar is a reason to panic. But if you had, you would have, if this was $100, you would have been now only risking, say, $40. This bar, though, however, is a reversal bar, and that's a clear indication that it's not happening what you expect to happen. So you move your stop under there, and now I'm only risking $50 instead of $100. Yep. And obviously we get taken out. So the question, at what point do you let the price drop to a low or reduce your stop? That's when the market tells me. The market was telling us here. That's hindsight. The market was telling us here. I can show you plenty of high test bars that then become, the market still continues to rally. But the reversal bar to me is a clear indication that it's time to start getting into capital protection mode. Or, in the case of the pound, you're following the trend up and getting your stop underneath here in profit protection mode. Yep. I have the Aussie CAD, even though it had a low test bar. Aussie CAD. You're still in that? Oh, or you took it short. Even though it is a low test bar, I was intending to leave my stop where it was. Do you think I should move my stop closer? Are you long or short? If you're long, I'm not sure why you're still in it, but you'd have your stop there, and if your stop was underneath this, you might as well leave it, because it looks like you're trading. You should have had your stop up underneath this, or certainly under there, and be out. If you're short, then you really haven't. Your stop should be above that at this point. Could move it. Moving it above there would reduce your risk. You are short, okay. I didn't see the divergence here, mate, but okay. Well, there's Canadian news out tonight, so there's that to consider, and I'd probably leave my stop up there because of that, not to get taken out in the volatility overnight. And then if this bar is a reversal bar, move your stop above that on Saturday morning, Monday morning. That's the way I'd take that. There's so much contradictory information out there. Where can we establish as a base economic overview our prop rules around this market news? Contradictory information. The people who create the contradictory information is people like myself who write market reports. I think the best place to go is news services that don't have opinion sites. They just provide the data, and you therefore analyse the data yourself. Sites like Bloomberg and Reuters, when you go to their market news websites, you just, or even just Forex Factory or some sort of economic calendar where it produces numbers, and you look at those numbers and you try and understand where the economy sits, rather than trying to say, oh look, Goldman Sachs are buying. Well, Goldman Sachs, they're human. They make mistakes too. They copped a lot on their currency trading as a lot of people. So I don't listen to other market commentators. I read what they're talking about, but I don't take it in. Just to sort of, you've got to be aware of not what the competition is doing, but it's good to be aware of what people are talking about. But in making judgment, I do that based on my own analysis of the raw data. When you say the euro is due for a run, you mean either way, a descend or a run up or a run down? Yeah, I think a run, because when I say a run, I think it's due for a trend. Hasn't trended for a while, as we can see if we look at the weekly. It's just rather messy. Yeah, it's been slowly inching its way up, but it's rather messy. It could be, it's uncertain which way it's going, whether this trend line is stronger than the monthly one. Well, they're both monthly trend lines, but I would be, with lower lows, I'd be more inclined to say that it's due for a run short, especially with the stagnation going on. And to fight the stagnation, in Europe, Draghi's going to either have to introduce quantitative easing, or he will introduce lower rates further into negative territory, because they're at zero already. The headline rate's at 0.5%, but the interbank rate's at zero, and they're talking about putting that negative. He's still got room to move, and that's what he's talking about last night. They did discuss QE. It'd be foolish not to discuss that as an option, but he said they've still got plenty of room to move on interest rates, and so that's why the market's sort of looking to run down or get bearish. And yeah, it's just the fact that it's gone sideways. We had little movement in the last 3 or 4 months where the other currency pairs have. I think it's due for run. That's where I was going with that. Do you not think that as a risk manager, we should have these rules set in stone? Oh, look, I try and set these, your management rules in stone as much as possible, but I know that market conditions can warrant sometimes a bit of, and should warrant sometimes a bit of play with a bit of flexibility, and you can't be rigid in the marketplace. You've got to have a set of a rules and a trading strategy that's going to work for you, but also be flexible enough to adjust to the conditions. And it's hard to sort of to come up with those. I'm pretty rigid in, if I see a reversal bar, I'm putting my stop in. I'm pretty set in stone about that. But where I put my stop is at 13 pips below it. Not necessarily. It might be 20 pips below it. That's not set in stone. But the fact that I'm going into capital protection mode as soon as I see something going against me is set in stone. There's too much flexibility based on your experience. This needs to be covered in the next boot camp. Too much flexibility. Right out. Well, don't be flexible. I've given you 3 rules. Follow them. All right? I've given you 3 rules to follow. Because not everybody's at your levels. There's some people who have been trading for some time, and they can be flexible. But if you need rigid set in stone rules, I've given you 3 rules. So if you get 2 consecutive buy bars, you move your stop underneath that second buy bar. If you get a test bar, you move your stop underneath that test bar. If you get a reversal bar, you move your stop under below or behind the reversal bar. There's 3 rules. Follow them. They can be a combination. It could be that the second, it wouldn't be a test bar if it's a buy bar, and it wouldn't be a reversal bar if it's a buy bar. But there you've got three types of bars that says, right, it's time to get out. So if you're looking at the Euro CAD or the CAD Swiss, here's a test bar, you move your stop. Does that make it a little more stringent for you? Cool. So do you move your stop when market's rocky? The market's rocky. I move my stop when the market tells me to move my stop. Not when it's rocky. And as in the Euro CAD, this bar here told me to move my stop, and I could have done it under this one, but I did it under this one. The pound CAD, there was a reversal bar, but my stop was underneath this, so there was no real reason for me to move it. I left my stop where it was, and I got taken out. Okay, I lost 1% on that. Stick to the rules. Absolutely stick to the rules. I could have moved my stop there, and you guys will, because now you've got rigid rules. There's a reverser bar. Move your stop. Right, guys. That's it for the day. And never stop repeating the rules. Okay. Become like a drone. Appreciate your time. You guys have a lovely weekend. I think we're on again for Monday. Let me just check that. Monday, is it Monday? Are we back on Monday? Anyway, you guys have got the, yes we are, cool, right. I'll see you on Monday. Have a lovely weekend. Yeah, daylight savings, so it'll be at 12, not 1 o'clock. Okay guys, remember that, it's at 12, not 1 o'clock on Monday. So, yeah, enjoy, and I'll put this up on YouTube shortly. Cheers.